Certainly a lot to go through, but it seems that the three-day weekend in the U.S. did nothing to soothe nerves. Now, here I have this chart showing you the S&P in blue, followed by the Nasdaq, and then Tesla, because we have to talk about what happened to Tesla. But this really shows you how this was a tech-driven sell-off. The S&P fares much better over the 3 days than the Nasdaq does. Of course, the destruction seems so much worse because the concentration in the S&P 500 has become so heavily tech. Of course, Tesla did not get included in the S&P 500. It is in the Nasdaq 100. So this was certainly a drag, falling 21% yesterday, its biggest one-day sell-off. Also adding to the negative sentiment there was that GM invested in Nikola, one of its rivals, building electric trucks. But really, this might be more of a factor of taking some of the froth out of the market. According to Fundstrat, it does take usually about 3 days to see this sort of action, to see some of the high valuations come out. JP Morgan Asset Management, though, does think markets are going to be flat from here because of the concerns, be it the election or the coronavirus. But one thing is clear, Anne-Marie, you mentioned this, some of the contagion moving across markets. Now, the Friday sell-off was notable because havens didn't move. This time, they certainly did. Look what happens yesterday. We get a bid to the dollar, a bid to U.S. 10-year yields. You can see in blue that the yields move lower, so the bond itself getting a bid there. Even though the S&P 500, that's this white line, coming back a bit this morning, so there is some dip buying. Still seeing actions in the haven, still seeing oil moving lower, so demand a concern, especially with one of the leading vaccine trials being put on pause.